Good morning, students. Welcome back to the session on accounting. Today we plan to discuss this banking part first of all, and then we also plan to start with a new chapter that is on NBFC. And in respect of banking, we were discussing about the preparation of the financial statements. In the last session, we discussed about the preparation of the balance sheet. So we'll now start with the preparation of the P&L. And this is no different from what we have really done in terms of preparation of the balance sheet or the P&L for any other company, as you would have seen in case of balance sheet also last time. But because of the fact that the format is different slightly in terms of the terminologies which come in, which are not really seen otherwise. So that's one aspect which one needs to be taking care. So considering this point, we'll just always need to remember the fact that P&L and the balance sheet, the way we need to approach that should always be the same which is for any other company. Plus the format, or you can say the line items, those should always be in the same sequence. And even if any of the item is missing, that should still be marked saying it's with nil value. Unlike what we can do in case of a company which is other than banking company. All right. And I'm just hoping that you would have completed the homework. I gave you some very small illustrations and those were very, very simple. So I'm just hoping that you would have completed. All of you, please confirm about that as well. So let's move on to illustration number 2 now, wherein we will understand the preparation of the P&L. This is very, very simple. It's all about preparation of the P&L. Okay, yeah. So page 8.19. This is illustration number 2. And you can all start solving it on your own. And I'm sure that you will be able to complete this. Sakshi, Radha, Shorya, Shubhra, they have confirmed they have completed the homework. That's good. Moving on to this illustration now. From the following information, we are required to prepare the P&L of Dimple Bank for the year ended 31st March X3. So the information is available for 2 years, X1, X2 and X2, X3. You are also required to give the necessary schedules. Other information. The following items are already adjusted with interest and discount. Tax provision. Okay, so following items are already adjusted with interest and discount. Then tax provision is 148. Provision for doubtful debts is 92. And the figures are in thousands. Loss on sale of investments. This is 12. The rebate on bills discounted. This is 55. Appropriation. 25% of the profit is transferred to statutory reserves. 5% of the profit is transferred to revenue reserves. So there are 2 reserves which are mandatorily required to be created as per the question. Now in this case, some of the points which you need to just be careful about are the ones which are given in other information. It says, following items are already adjusted with interest and discount. Now, if we talk about rebate on bills discounted, this is already adjusted. So that means any of the interest or any of the discount which should flow in, that is already adjusted over there. Okay. So let's move on to the P&L, and in the similar manner, we'll approach the one which we did for illustration number 1. Shorya is asking about illustration number 4. I'll come to that, Shorya. Don't worry, we'll discuss about that illustration also. So first of all, let's prepare the format. And you should keep preparing the schedules alongside, but because of the space constraint, you understand that we are not able to do that. So we'll say it's Dimple Bank. P&L for the year ended 31st March X3. P&L for the year ended 31st March X3. Okay. And now, because the information is available for 2 years, so that's why we will also have to include the information for 2 years. That means the current year and the comparative year. So first is 31st March X2. Then we have 31st March X3. Then we'll have the schedule number. And herein we have got the particulars. Yeah. Now in terms of the particulars, let's begin with this. Interest earned. Now in this case, you should not really be worried in terms of which all items will come in, because the format of the P&L will have to be strictly followed. So we can just remember all of these line items which will come in the P&L. So the first one will be interest earned. Now in terms of interest earned, we are not putting any number, but yes, the schedule number will not start with number 1. This will start with the number which is assigned to this schedule. Unlike what you will do in case of any company other than banking. Remember, there we used to start with the note number from 1, 2, 3, 4 and so on. Here you can't do that. Here you have to strictly follow the schedule number. Okay. Other income. That will be 14. And then we have total. Yeah. Then we move on to the expenditure. So this was income. Then we move on to the expenditure. So interest expended. Interest expended is 15. Number 1. Number 2, operating expenses 16. Okay. Then we have provisions and contingencies. Provisions and contingencies. And then we get the total. Okay. Then we get the P&L. So net profit or loss for the year. Then of course we'll have various other items in terms of the profit or loss brought forward, which is brought forward. That is about bringing the opening balance to the current year. And then we have the total. All right. Then we have appropriations. Let's understand the appropriations. Transfer to statutory reserve. Yeah. Transfer to statutory reserve. Transfer to other reserve. balance carried over to the balance sheet. Okay. Now let's begin with this. So we'll move on to the first schedule, schedule number 13. Interest expended. And here again in the schedule 2 years will have to be given for X3 and for X2. So this is for X2, this is for X3. Yeah. So the first item is what? Interest or discount. Now interest for the current year is what? 2045. Yeah. And for the last year it was 1427. Interest or discount. Now all of these items are also fixed. So we'll have to pick this up one by one. Okay. Yeah. So in terms of this adjustment related to the current year will come slightly later. Yeah, will come slightly later. Just give me 1 minute. Huh? I just need 1 minute. Sorry. Okay, so now we will continue with this. So we were on to this interest. Sorry. Okay, so now we will continue with this. Oh, so I think by mistake I have put this interest expense over here. So sorry, and thanks for letting me know. This is interest earned. That's correct. By mistake I have written this. This is interest earned. Thanks for this, Shaurya, Aditya. Sorry, yeah. Okay, so now in terms of the adjustment related to this interest, so I will come this interest later. Let's move expense over here. Sorry. And now the next is interest earned to incorporate income on investments. So the income on investments is direct and there doesn't seem to be interest adjustment over here. Thanks for this, Shaurya, Aditya. Sorry, yeah. So now in terms of the adjustments related to this interest, let's expense over here. Now the next is incorporate. Now you should pick up all of these amounts from the information side, and where does it seem to be? Next for this, so there are balances with RBI. So balances with RBI. Related to this interest. At times there may be a confusion that if this interest on balances with RBI is not really specified, because from the question you will not get to know whether it is debit or credit, whether it is expense or income. So this is something you'll have to understand on the basis of terms which are used. When the balances are there with RBI, so obviously we will be getting interest income on that, and that's why this should also become income. So this is 177 for the current year and 155 for the last year. So I can see some problem in terms of audio. Vijay, can you please check if there is any problem with the audio? Vijay? Now okay. Can you please confirm whether the audio video is all fine? So I've been told that the audio video is all fine. Can you please quickly confirm? Video, audio, all okay? Everyone please confirm, huh? Video, audio is all okay? Okay, perfect. Sakshi, Shubhrat, they have confirmed. So I'm assuming it's all fine. So I was talking about interest on balances with RBI. Now, if you look at the question, at times there could be a confusion that how do we get to know whether this item which is written in the question is income or expense? Because nowhere it is specified in the question. Secondly, there is no understanding in terms of having a debit amount or a credit amount. So that's why at times a confusion may arise. Now, for this, you will have to go with the terminologies. Whenever we have balances with RBI, so obviously we will be getting the interest income from them. We will not be paying the interest. Yeah, so that should become the basis for you to put down all of these informations into expense or income. Yeah. So now interest on balances with RBI. Interest on balances with RBI and other interbank fund. Other interbank fund. So this is 177 and 155. Yeah. Then in terms of others, we don't have any information, so we don't need to put down that others. Now moving on to the next item, that is about interest and discount, which we put on hold for some time. So let's move on to this. On to interest. Now the question says the following items are already adjusted with interest and discount. So what are those items? Tax provision. Tax provision. So if the amount is already adjusted with interest and discount, so that means this has been deducted from interest. So we need to add it. Similarly, provision for doubtful debts, we need to add it. Loss on sale of investments, we need to add it. Yeah. But as regards the bill rebate on bills discounted, that will get adjusted with the discount amount. So we don't need to do anything about it. So what we can do is we can give a working note number 1. for interest or discount earned during financial year 2000 X2 X3. So how do we start with? So we have interest and discount. So we have interest and discount for the current year 2045. We have interest and discount 2045. Aditya is saying, sir, 2045 is what you have missed. No. So I intentionally put this on hold. Now we have moved on to this amount. Then we will make the adjustments for tax provision, provision for doubtful debts, and tax provision, provision for doubtful debts, loss on sale of investments. The question says that all of these have already been adjusted, means those have been deducted. So we need to add them back. 148, 92, loss on sale of investment 12. So what does it become? It becomes 2297. So we can bring it over here 2297 and give the reference of working note number 1. Okay. Yeah. Now, with this, we can just close this account now. We can close this account. So interest on, what's the total over here? All of you quickly do the total. So this is 2586, what I'm getting from the study material, and you should also confirm this quickly, please. 1696, and I'll move this number over here. So this should be 1696 and 2586. Okay, clear? Then we will move on to the next schedule, that is other income. Moving on to the next schedule, other income. So I'll just clear this working now. Moving on to the next one, other income, schedule 14, other income. There again we have X3, X2. Okay, now in terms of other income, let's understand what are the items we will move. Commission, exchange and brokerage. This will go to other income. Commission, exchange and brokerage. Commission, exchange and brokerage. So this is what 712 and 722. Then we have Profit on sale of investments. This is 122 and 12. Profit on sale of investments. This is 122 and 12 for last year. Then from this profit, we need to reduce the loss. Remember, the loss was reduced from interest, but where should that loss go? To other income. It should be adjusted from this profit. Less loss on sale of investment. Now, in the exam, when you will prepare all the schedules, so you will not wait for this schedule to come and then pass this adjustment. You will just simultaneously do this. So this is 1, 2. So what's the amount that we get? 822, 734. So we'll move this number over here, move this number over here. Now, in case of this P&L, as you would be seeing, the technicality is not really in terms of the computations of amounts. The only different thing for you in this question would be that which item will go under which head, isn't it? Am I correct when I say that? I don't think that in this question you would be struggling with any of the adjustments. All the amounts are directly captured. Can you see this? Most of the items are very simple. The moment you know that this head, that this particular item belongs to this head, then its computation is very easy. The only problem will be that some of you may be thinking, sir, why commission will go to other head? Why profit will go to other head? How do we know that commission will go to this head, interest will go to that head? This is something which you'll have to just practice. Yeah? Or you can just read these formats, maybe twice or thrice. Then you will get an understanding around it. Okay. So now, moving on to the next schedule. Schedule number 15. Interest expense. Interest expended. Okay. So there we have interest on deposits. On the deposits, bank will have to pay interest. So what's the amount? 822 and 612. Vijay Shankar is asking, sir, why did we reverse the adjustments on interest and discount? Because you will not adjust loss on sale of investment with interest. Will you ever do that? No. So that's why you need to reverse to correct it. So that's a correction. It's given in the question that these amounts were adjusted with interest, which is incorrect. So you need to correct it. KV Rama is asking, sir, commission, exchange, brokerage might also be the expenses. That's the point of confusion. I told you that in the exam, these things may be the only one which trouble you. So that's why you need to understand with the terms. See, generally for a bank, you will assume that commission, exchange, brokerage is something they will charge, wherein they play the role. And they earn this as an income. Generally, you will not see banks paying all of these expenses. Shekha is asking, sir, why the rebates on bill discount is not added to the interest or discount? Because this is a kind of discount which is required to be adjusted there. That's why I will not come over there. Moving on to the next item, interest to RBI. So this is interest on RBI or interbank borrowings. Or interbank borrowings. So this is 147 and 127. Okay, so this will become 969 and 739. So we can now move this to the P&L. 969 and 739. Okay. So we are done with this interest expense. Now all the remaining expenses, where do they go? If you'll see, most of them belong to operating expenses. So the last category is the one which they belong to, operating expenses. Okay, so now we will start plotting the items. Payment to and provision for employees. So this is 855, 727. One. Yeah. Rent, taxes and lightning. Rent, taxes and lighting. So this is 179, 158. Then we have next item, printing and stationery. 212, 147. Then we have advertisement and publicity. All of these will go to operating expenses. Advertisement and publicity. So this is 98 and 112. Then depreciation on bank's property. Then directors' fees, allowances and expenses. Directors' fees, allowances and expenses. So all of these are direct numbers. 212, 148. 212 and 148. Auditors' fees and expenses. Auditors' fees and expenses. So this is 110 for both the years. Then law charges. Postage, telegram, telephones. So this is 62 and 48. So in the exam, you can just know this concept. You can just see how simple can this become for you to score marks. Repair and maintenance. 66 and 57. Insurance is 52 and 42. And then we give the total. Radha has computed the total. Thanks, Radha. This is 2096. Okay, which we can also move over here, 2096. And for the comparative year, it is 1697. Very good. 1697. 1697. Great. Yeah. Aditya has a query. Oh, Aditya, I think missed some part. No problem. So I don't think you would have missed anything significant. Prakash is asking, sir, we will receive interest on deposits with the bank. Then how it can become expenses? See, deposits, if you understand for a bank, will be the one which it would have taken. What are the deposits for the bank? Deposits which it would have taken. Generally, you will not use this term for the deposits given by a bank. Okay, so that's why for deposits, what should you do? That's why for deposits, you should consider this to be an expense unless it's specified. And this is what I'm telling you. This is the only challenge you will face when you will be doing some of these sort of preparation in relation to banks or many times NBFCs also. Okay, now moving on to the provisions and contingencies. Now we have two provisions, tax provision and provision for doubtful debts. So we can also create a working note if required, or otherwise I can just plot the number over here. This is 148 plus 92. So this will be 240 for the current year and last year it is nil. Now you can start computing the totals and let me know. What's the total of income, please? What's the total of expense? Total of income, total of expense, please. Quickly. Total of expense, total of income. Mukmala has solved this completely. Very good. We are almost done on this. Quickly, all of you. Okay, great. Shubhrat is saying total of income is 3408. And for last year it is 2430. For the expense, what's the total? 3305. And for the last year it is 2436. Okay, so do we have profit or loss for the year? I understand we have profit for the current year. And I think same is the answer from Radha and Shubhra. Sakshi has got the same answer. Very good. So the profit for the current year is 103, and last year there was a loss. So we can say net profit or loss. Negative, this bracket represents loss. Okay, and this loss would be carried forward in the current year. Loss of last year carried forward to the current year. So what do we get? 97 is the carried forwarded amount. So why is this required? Because the reserves are also required to be created as per the question. Appropriations are to be made. Now what's this appropriation? First of all, we need to create a reserve which is in the nature of statutory reserve. So this will be 25% of the profits. So what's the profit? 103 into 25%. 103 into 25%. So what do you get? In the current year, we get 25.75. Last year it's nil because there was no profit. Next, 5% of the profit. 5% of the profit will get transferred to other reserve. So what's 5%? 103 into 5%, that will be 5.15. And out of the total, the balance that would be carried to the balance sheet. The balance gets carried to the balance sheet is what? 66.10. Okay. Yeah. Clear on this, all of you? Vaishnavi has got the same answers. Great. Prakash has given the same response. Okay. Vijay Shankar is also giving the same totals. So you should also note down your homework. Illustration number 3 on page 8.95. Illustration 3, page 8.95 is your homework. Okay. Mukmala is asking, sir, why we have taken 103 for creation of reserves. This is because of the question. Question says that create a reserve equivalent to 25% of the profits. Now what's the profit? Profit is for the year. Profit doesn't mean the last year balance. Okay, here. This 97 is positive. Huh? Thanks, Radha, for this. Then the next point comes from, okay, yeah. Shubhra is clear on this. Okay, great. So now you should note this down as your homework. Yeah. Now coming to this illustration number 4. All of you, if you can move on to illustration number 4, please. Which also came as a request from Shaurya. Shaurya is asking, sir, can we do this illustration number 4? Because it covers all the schedules. Okay, so if you can go to question number 4, illustration number 4, you will see that it covers all the schedules. See, when it comes to illustration number 4, which requires you to prepare the balance sheet as well as the P&L, this would generally become a very lengthy solution. Okay, so if you go to this solution, so it is running into 1, 2, 3, 4, 5, 6 pages. This is running into 6 pages, which will be a very lengthy solution. Generally, you should not expect such type of requirement in the exam, but you never know. So that's why you should practice this. And as regards this illustration, it is no different because we have already seen how to prepare balance sheet. We have already seen how to prepare a P&L. So we can definitely prepare both. Yeah. So this illustration number 4, you can just practice. But as I told you, this is generally not the expected one. Okay. Clear? Clear? Okay. So now we will move on to the next topic. NBFCs. All of you, please move on to NBFCs now. See, NBFCs are similar to banks in terms of the broader understanding. Yeah, quite similar to the banks in terms of the operations. But of course, those are not as same those are not into the operations which are exactly same. There are differences between banks and NBFCs also. We can just, for the purposes of our understanding and for just simplicity's sake, understand that a lot of the activities which NBFCs do today are similar to the one which the banks are doing. They have also got advances which are given to the customers on which they earn interest income. They also receive funds on which they will be required to pay interest. Yeah, so that's why similar to the banks, in the books of the NBFCs, the significant component will be the advances given. The significant component of the income which they will have will be the interest income. Okay. So let's now move on to the understanding of NBFC, definition of NBFC, and then we'll also understand some of the perspectives around it. Okay. If you can go to page number 9.2, please, all of you. If all of you can go to page number 9.2, let's understand the definition, please. What is an NBFC? It's a company which is registered under the Companies Act. So first, it has to be a company. It is engaged in the business of loans and advances. Means what's the business? To give loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local authority, or other marketable securities of like nature, leasing, hire purchase, insurance business, chip business, but does not include any institution whose principal business is that of agricultural activity, industrial activity, purchase or sale of any goods, or providing any services, and sale or purchase or construction of immovable property. Okay. A non-banking institution which is a company and has principal business of receiving deposits under any scheme or arrangement in one lump sum or in installments by way of contribution or in any other manner is also a NBFC. Yeah, so there are various things in case of an NBFC which we need to know. Now, for us to check whether an entity is engaged in the business of NBFC, there's a test we can perform. And what's the test? This is called as 50-50 test quite commonly. If the financial assets constitute more than 50% of the total assets, and financial income constitute more than 50% of the gross income, and both these conditions are fulfilled, that means it has to be and, then such a business is considered to be the one in the nature of NBFC. So I'll repeat. Let's suppose an entity has got total assets. Okay. Out of the total assets, more than 50% assets are for financial activity. What is financial activity? Giving advances for the purposes of earning interest or returns on that. And out of the gross income of that entity, more than 50% of the income which is generated, that is financial income, means that is from financial activities. If both these conditions are fulfilled, then such an entity will be in the business of NBFC. Okay, clear on this? This test is required to be checked to assess whether an entity is in the business of NBFC or not. Very commonly, this is called as a test to check the principal business of the entity. Means through this test, we will get to know what's the principal business of the entity. And whatever is the principal business of the entity, that will become the basis for that to be classified as NBFC or not. And in case the principal business of the entity is into the financial activities, on the basis of which they are generating financial income, on the basis of which they have got financial assets, that will become an NBFC. Yeah. Now, for your purposes, you don't need to get into the technicality of what is a financial asset, what is a financial income. You can just keep it very simple in a way that whatever income you generate from the financial activities, means from these activities like business of loans, advances, acquisition of shares, etc. Yeah, all of these are what? Which will lead to financial income, and corresponding to that will be financial assets. Okay, clear? Clear on this? Now, another very important requirement for an NBFC is the registration. Now, NBFC is the one entity which is involved in businesses. NBFC is the one which is involved in businesses related to advancement of money, related to lending of money, and wherein the public is also involved. The public is interested in this. And the moment we see anything wherein the public gets involved, that will have to be regulated. And that's why NBFCs, similar to the banks, are highly regulated. They work in a very regulated environment, and they are also subject to regulations. And those regulations are very stringent in nature. NBFCs are governed by various regulations. One of them happens to be the RBI Act. The RBI Act, which requires the NBFCs to obtain registration, means the certificate of registration as an NBFC. So no NBFC can operate the business of NBFC without obtaining the certificate of registration from RBI. Only and only when it has got the certificate of registration from RBI, it can get into the business of NBFC. Okay, that's a must for any NBFC to get into the business of NBFC. Clear? Now, let's try to understand how can an entity look into the requirements, or what are the various requirements related to the registration of business, etc. for an NBFC. So let's move on to page number 9.3 for the registration requirements. And all of you, please also remember that some of these topics like banks, NBFCs, they can also be considered for asking theoretical questions. And these are some of the things which may form part of your theoretical questions, including the registration requirements. No NBFC shall commence or carry on the business of NBFC without obtaining certificate of registration and having net on funds of 200 lakhs. What are net on funds? You remember in case of banks, we discussed about net on funds. Tier 1 capital, Tier 2 capital. You remember in case of banks, we discussed about it. Same is the case over here. Here again, we have got Tier 1 capital, Tier 2 capital. And this net on fund is nothing but the capital. So that means NBFCs need to have this capital of 2 crore. Yeah. Only then they will be able to get into the business of NBFCs. Clear? Now moving on to the next part, if you can go to page number 9.4, please. On the next page, you will see some differences have been specified. Now this is again, I would say, an important theoretical question for you. Difference between NBFC and a bank. So let's see what are the differences. An NBFC cannot accept demand deposits, which a bank can do. An NBFC cannot accept demand deposits, which a bank can do. NBFC is not a part of payment and settlement mechanism, which is there in case of a bank. NBFC cannot issue checks drawn on itself, which a bank can do. Okay. Deposit insurance facility of PICGC is not available to NBFC depositors, which is available to a bank. Yeah. So these are some of the differences in respect of banks and NBFCs. Okay. Yeah. So let me just go to your questions now. Mukmala is asking, sir, why it is mentioned about acquisition of shares but not about issue of shares? You see, issue of shares is not really a business. That is about obtaining the capital. So that can't be the business. If a company issues shares, that will not be its business. Yeah? Shaurya is saying, sir, please explain. I didn't understand this, Shaurya. Then I think I missed one query of Manpreet. Manpreet asked me, sir, profit 97 आया है, तो उसकी provisioning क्यों नहीं की? 103 की, oh, so that is related to the question we solved, and I think I missed that part. See, in relation to this profit, if you will see, the profit was 103. That was not 97. 97 was after the carry forward balance adjustment. So profit for the year was 103. That's why we created provision over. Then I see some request from Vishal. He's asking about Hindi. So Vishal, please understand that all of you are into this sort of stream which is English now. So you should appreciate that, number one. Your examinations are also conducted in English. So it's better you understand this one. And also we have students across regions. So that's why this is the mode which we are following. Okay, so Mukmala is asking, sir, what do we mean by 50-50 test? So that check of financial assets and financial income out of total assets and gross income. That is called as 50-50 test. Vasudha is clear on this. Vishal, I think I have already clarified my point. Okay. So now we'll move on to the next part. That is about classification of NBFCs. Now there are certain NBFCs which are exempt from obtaining the registration from RBI. We discussed that NBFCs need to obtain a certificate of registration from RBI, but there are certain NBFCs which are not required to do that. Why? Because they are governed by some other act. For example, housing finance institution, they are regulated by National Housing Bank. Stock exchanges, they are regulated by SEBI. Insurance companies, those are regulated by IDA. Yeah. So all of these companies are therefore not required to obtain the registration from RBI. Yeah. Now, moving on to the next part. NBFCs may be categorized in terms of registration requirement with RBI. And in respect of NBFCs, various directions are issued by RBI. What are those directions? Those directions are nothing but the rules and regulations applicable to NBFCs. And that's why we can say that on the basis of directions, for the purposes of our discussion, we can just bifurcate them into three categories. Deposit taking NBFCs, deposit taking or non-deposit taking. Means deposit taking NBFCs and non-deposit taking NBFCs. Deposit taking is termed by DT. Then we have non-deposit taking NBFCs, NDT. Under non-deposit taking NBFCs, we have two categories. Systemically important non-deposit taking NBFCs, non-systemically important non-deposit or deposit taking NBFCs. So I'll just take you to the part in the chapter itself instead of writing it. Otherwise, I think it may become a sort of confusion for you. Yeah. For the time being, we can just say that depending on the size of the NBFC, they can be categorized into systemically important and non-systemically important. And then on the basis of the directions and the types, they can again be classified into deposit taking and non-deposit taking. Okay. And we'll understand what's the relevance of all of these categorization. How will this really impact us in terms of categorizing any type of NBFC into any of these categories. Now we'll move further on to the computation of owned fund and the net owned fund. Net owned fund we have just discussed. What is net owned fund? You can say it's about the capital requirement for an NBFC. Correct? So let's first of all understand what is net owned fund. Net owned fund. Net owned fund means owned funds less certain items. I'm not putting down all of those items. Those are given on page number 9.11. You can all go to this page number 9.11, please. So I'm not writing down the full formula. It's given over there. Own funds less investment in shares of subsidiaries or the companies in the same group or other NBFC, less book value of debentures, bonds, outstanding loans and advances, including hire purchase and lease finance made to and deposits with subsidiaries and companies in the same group, to the extent such sum exceeds 10% of the owned fund. Now, a question will arise, what are owned funds? For owned funds, we can say this is about aggregator, summation of paid up equity capital, preference shares, which are compulsorily convertible into equity, free reserves, security premium, capital reserve representing surplus out of sale proceeds of assets, excluding the capital reserve by revaluation of asset. And from this, what do we need to deduct? Accumulated losses, intangible assets. Can you see some similarities in this owned fund to any other term that we discussed in case of a bank? Who will answer this question? Do you find some similarity in this owned fund that we have discussed to a term which we discussed in case of a bank? All of you, quickly. I think it's very easy. Do you find some similarity to anything that we covered in case of a bank? Quickly. I'll just wait for your response. Quickly. Quickly, I will wait for your response. Quickly, all of you. Any thoughts from your side? Quickly, huh? Okay, great. Vasudha is saying, sir, tier 1 capital. Very good. If you go back to your notes and you see the definition, if you see the criteria of computing tier 1 capital in case of a bank, you will see that exactly similar to this. And the reason why I'm asking you to compare this will be that whenever you will revise this during examination, for the purposes of your revision, yeah, you should try to just link all of these concepts as many as possible. This is because of two reasons. One, when you link these two, your revision time will go down because you can say, okay, it's the same thing which we discussed in case of banks. Secondly, if you link, you will also understand that what are the differences between these two. Because in the exam, this may also become a confusion that in case of a bank, this item was eliminated, but in case of an NBFC, this item is not eliminated. The remaining all items are same. Yeah, so that's how you should try to look into it. And I can see the same responses coming from Darshita, Moini, Shaurya, Aditya. Very good. And please understand the perspective that in case of NBFCs, most of the things which we are going to discuss now onwards will be similar to what we saw in case of a bank. Classification of assets will be quite similar. Prudential norms will be quite similar. Here again, we have got capital adequacy requirements. Here again, we have got provisioning requirements. Okay, here again, we have got NPAs. So most of the things you will find similar over here. The criteria may be different, but most of the concepts, the underlying concepts will be similar. Okay. So now we can go to illustration number 1 on the same page to understand this computation in a better manner. You are required to calculate owned fund. Please understand the question is not asking you to compute net owned fund. Owned fund means core capital, tier 1. Remember? So from this, you are required to calculate owned funds. Paid up share capital, free reserve, compulsorily convertible preference shares, revaluation reserve. Is simple, easy to do. Yeah. So what is own fund in this case? That will be paid up share capital. 150 lakhs. Then free reserves. Will it go? Yes. Free reserves. 250 lakhs. Compulsorily convertible preference shares. Of course. Because this is no less than the pure equity. Then revaluation reserve. Will it go to own fund? No. So this will not form part of own fund. So what do we have? 450 lakhs is the amount of own funds. Okay. 450 lakhs is the amount of own funds. Clear? Yeah. Now moving further on to illustration number 2. Moving further on to illustration number 2. And I think this is page 9.12. Templeton Finance Limited is NBFC. See, the good thing for you would be that in the question, you will always be given whether it's NBFC or not. So this assessment you will not be required to do. So you have been given some information. You are required to compute net own fund as per NBFC systemically important non-deposit taking and deposit taking company directions. For the time being, please ignore these directions as to what do you mean by this. We'll just ignore this aspect because for our purposes, it will all remain same. As we move further, I'll let you know what could be the differences over here. So let's compute the net own funds. For the purpose of computation of net own fund, what do we need? We need to compute own fund, and then from that own fund, we need to eliminate some items. Yeah. So can you all quickly start doing this? So I'll wait for a couple of minutes for you to solve this, and then I'll go to the solution. Quickly, if you can solve this and let me know the answer. But do solve this on your own. Don't look at the solution in the study material. Quickly, huh? I'll wait for a couple of minutes for you to solve this. Then I'll move on to the solution. Everyone done? Done with this? If you are done, you can start sharing your answer, please. So I'll go to the solution now. So net own fund. So first of all, we will compute the own fund. So we have got paid up share capital, free reserves. Paid up share capital, free reserves. Paid up share capital is 100, free reserves are 500. So this becomes 600. From this, we understand there is deferred expenditure which needs to be eliminated. 200 less deferred expenditure. 200. Okay, so we get 400. Yeah. Now, from this is what? Own fund. From this, we need to eliminate investments in shares of subsidiaries and group companies and investments in debentures of subsidiaries and group companies. Less investments in shares of subsidiaries and group companies, debentures of subsidiaries and group companies. This is 100 and again 100. These two need to be eliminated. 200 needs to be eliminated. Okay. Now we can say this is A and this is B. Now what is 10% of own fund? 10% of A is 40. Yeah, 10% of own fund is 40. So excess of investments over 10% of A is what? 160. Excess of B over 10% of A is what? 200 minus 40. That would be 160. That would be 160. Correct? Now, what will be the net own fund? Net own fund means A minus C. This is C for us. A, that is own funds, less C. So what is A? 400. Less, what is C? 160. So what do we get? 240. 240 is what we get in case of net on funds. Now, what we should do is we should go back to the formula which is given for net on fund. There we should read it again and then you will get the clarity. Sakshi, I think, has solved this, which is good. But let's get on to the formula again and then we will re-understand this again. Net own fund means own fund minus. So what is own fund? This one. What is own fund? This one. So this A was nothing but the own funds. Now from own funds, what do we need to reduce? We need to reduce investments in shares of subsidiaries, book value of debentures, including so and so, to the extent, such amount, to the extent, the sum of these amounts. Yeah, exceeds 10% of own funds. So sum of these two amounts is what? 200. Sum of these two is 200. Now this needs to be excluded to the extent this 200 exceeds over and above 10% of own funds. So amount in excess of this 200 over and above 40 is what? 160. So this 160 will be eliminated from this. And this 240 therefore will be called as net on funds. Clear? Lakmala, please hold on to this query here. I told you, please wait. Vasudha has also computed net on fund. KV Rama is saying, sir, what is this deferred expenditure? Deferred expenditure, you can say, it's a kind of expenditure which is deferred and which is a kind of, say, P&L debit balance. Nandishwaram is clear on this. Great. Nandishwaram is clear. Yeah, all of you clear on this? Yeah, everyone clear? Clear? Very good. So we can now take a break. Okay, Shubhrat is also clear. We can now take a break of 10 minutes. After the break, we will continue with our discussion and we'll be starting off with the prudential norms, etc. Okay. So let's take a break now. Welcome back. So we can now continue with our discussion. I can see some queries from KV Rama. KV Rama is asking, sir, why did we subtract from owned funds? It should be share capital reserves, less investments in subsidiaries, less the book value of debentures in excess of 10%. No. See, this is the way you are required to compute. And that's why I've explained you the formula again after the computation. This can be a point of confusion, but this is something you need to just understand the way this is done, not the way which you are asking. That can be a confusion definitely, but forget that this is how it's required to be done. Then I think you had this query or same query was coming in twice. Okay, fine. Now moving further onto the prudential norms, we discussed that the NBFCs can be categorized on the basis of directions which are applicable to them. Directions, you can say these are like regulations. So one, we have NBFC, which is non-systemically important non-deposit taking. Then we have NBFC, which is systemically important non-deposit taking. And then we have deposit taking NBFC. Now the reason for categorization of NBFC is this way is that the directions which are applicable to non-systemically important non-deposit taking are different from deposit taking NBFC. Similarly, the directions which are applicable to systemically important non-deposit taking NBFC are different from the deposit taking NBFC. So the directions for these three are different. Okay. Now, as regards the basis of segregation of the NBFCs into these three categories is, you can say, on the basis of their size. We don't need to get into depth as around what's the size, how would an NBFC be classified into systemically important, when would it become non-systemically important, what is the meaning of this systemically important. Not required to get this. You can just say that there are three types of NBFCs for the purposes of your computation. Okay. Then, as we move further, in respect of the income recognition criteria, it's similar to the one we saw in case of banks. Income will be recognized on NPAs only when it is realized. But in respect of performing assets, it will be recognized on accrual basis. If any income has already been recognized on any asset which is an NPA, but that income has not been realized, then such income is required to be reversed. Again, the same thing which we saw in case of banks. Correct? Yeah. As on the income from investment, once again, it's the same criteria which is required to be followed. Accounting of investments is once again similar to what we saw in case of a bank. Classification of assets. Once again, it's the same classification of assets which we saw in case of bank. But we can move on to this one now, because the criteria of provisioning and the criteria of categorization into these categories is different from what we see in case of bank. The categories are same, but the criteria of classification is not same. So let's understand these. So we have assets, or we can say the advances. Okay, assets or the advances categorized into standard, then we have substandard, and then we have doubtful, and then we have loss assets. All the four categories which we saw in case of a bank. So let's move on to the first category, standard assets. What are standard assets? The one which are good. Repayments are on time, there's no default, everything is going fine. What is a substandard asset? Now, this segregation of an asset into substandard will be dependent on the classification of NBFC. Okay, so let's understand. An asset which has been classified as NPA for a period not exceeding 12 months. NPA for a period not exceeding 12 months. So there is an asset which has not been an NPA for a period exceeding 12 months. So that will become substandard assets. Okay. Now, this will be the criteria for an asset to become substandard in case NBFC is systemically important non-deposit taking and deposit taking. So this will be when it is deposit taking in NBFC or systemically important non-deposit taking. In case the NBFC is non-systemically important non-deposit taking, in case the NBFC is non-systemically important non-deposit taking, these are the terms which you will see in the question also, in the exam also. That's why you should remember these terms. Systemically important are termed termed like this. Non-systemically important non-deposit taking are termed like this. Deposit taking are termed like this. So it's not necessary that in the exam you will get full form. At times only the terms or these abbreviations will be used. Okay. Now the regulations say that in case an NBFC is non-systemically important non-deposit taking, then substandard asset will be an asset which has been classified as NPA for a period not exceeding 12 months. Herein, this 12 months criteria will change to 18 months. Now understood the difference? Why this classification of NBFCs into these categories is important? And once again, Mukkamala is asking me the same question. That said, how to conclude an NBFC as deposit taking, non-deposit taking? Why do you want to get into that when it is not required at your level? You don't need to get into that. Do you want to study something which is out of the syllabus? Tell me. There's no point getting into it. That is not required for you to get into. Just very simple. One point you need to remember, that this is done on the basis of size of the NBFC. Now, what's the size? What's the criteria? I don't need to get into this. So there are two ways. One, deposit taking, means those NBFCs which are taking deposits, and these are the two which are not taking deposits. Then these two are further segregated on the basis of size. Okay. Now moving on to the next category, doubtful assets. Doubtful assets. Once again, in case the NBFC is deposit taking or systemically important non-deposit taking, then the doubtful asset will mean a term loan, lease asset, hire purchase asset. All of these things you can check on page number 9.19, 9.20 and so on. Hire purchase asset or any other asset which remains substandard for a period exceeding 12 months. So this is substandard for a period exceeding 12 months. Okay, and this 12 months criteria is for deposit taking, systemically important non-deposit taking. However, this period of 12 months will change to 18 months in case it is non-systemically non-deposit 18. So this will change to 18 months. Yeah, clear? So we can say yeah. So this chart, which I am just trying to prepare for all of you, should really help you at the time of examination to understand this classification. And moving on to the last category, loss asset. What's the loss asset? It's the same thing. When all the hopes of recovery are gone, money will not come. There's no chance of recovering back the money. So that is what we call as loss asset. Okay. Now, the next question will be to check. The next point will be to check what is an NPA, because we understand that all these three categories are what? NPAs, isn't it? All these three categories are what? They are NPAs, and this is performing asset. And we understand the moment an asset becomes NPA and it stays an NPA for less than 12 months, it moves into substandard category. So now a question may arise, what is an NPA, on which we can move now. If you can go to page number 9.20. So what is an NPA now? Let's understand an NPA. And it's again similar to what we see in case of bank. We are not saying exactly same. Very similar. There are a lot of similarities over here. Let's understand the similarities. An asset in respect of which interest has remained overdue for a period of 6 months or more. A term loan inclusive of unpaid interest when the installment is overdue for a period of 6 months or more, or on which interest remained overdue for a period of 6 months or more. A demand or call loan which remained overdue for a period of 6 months or more, or on which interest remained overdue for a period of 6 months or more. A bill which remains overdue for a period of 6 months or more. The interest in respect of debt, etc., which remains overdue for a period of 6 months or more. Any dues on account of sale of assets or services which remain overdue for 6 months or more. Yeah. If you look at all of these requirements, these are for non-systemically important, non-deposit taking NBFCs. In case it is systemically important, so I would say point number A, B, C, D, E, F. For all of them, if it remains overdue for 6 months or more, okay, then it will be NPA. And this 6 months or more is in what scenario? When it is non-systemically important, non-deposit taking. And this criteria of 6 months will change to 3 months. Means it is overdue for a period of 3 months or more when it is systemically important non-deposit taking or deposit taking. Okay, and this is in relation to point number A, B, C, D, E, F. Clear? G. Point number G. Lease rental and hire purchase installment which is overdue for 3 months or more. However, if it is non-systemically important, non-deposit taking, then this 3 months will change to 12 months. Yeah. And last is, if any of the facility becomes NPA for a customer, then all the facilities of that customer will become NPA. Yeah. So for G, so for point number G, we can say it's 12 months in case of non-systemically important non-deposit taking. But in case it's systemically important non-deposit taking or the deposit taking one, then it will be 3 months. Okay, this is for point number G. Yeah, A, B, C, D, E, F, and G. Okay. Now moving on to the provisioning requirement. We all understand that the provision is required to be made for all these categories of assets. So I'll just clear this part of NPA now. And I'll also clear the criteria. Similar to what we do in case of a bank, even for standard assets, provision is required to be created. Provision is required to be created. So same way we'll create a provision for NBFCs also for all these categories. Now for loss assets, what's the provision? 100%. It's 100% provision. For loss assets, the provision will be 100%. In case the assets are doubtful, then 100% provision should be made to the extent to which advance is not covered by realizable value of security. Okay, that means unsecured part is 100%. Similar thing is there in case of bank. In addition to the above, depending upon the period for which asset has remained doubtful, means for the secured portion, provision to the extent of 20 to 50% of the secured portion will be made. So in this case, unsecured part will be 100%. In case it is secured part, then we'll have to go by the period. Period for which asset has been considered as doubtful. If it is up to 1 year, that means less than equal to 1 year. Then the provision will be 20%. If it is 1 to 3 years, if it is 1 to 3 years, then the provision will be 30%. If it is greater than 3 years, then the provision will be 50%. Okay. Shora is asking, so does it mean that the substandard assets will be NPA if they are between 6 to 12 months? And if an S, oh, so Shore, I think I missed out on those points. We'll move on to this later, please. Now, Mukula is asking about illustration number 2. I'm not sure what is it that you are looking at illustration number 2. I would request you to please go with whatever we are doing now. I'm not sure where did you pick this illustration number 2 from. Yeah, it's all same. There's no change. As regards some of these queries, I'll come to this later. Please, yeah, I would request all of you to please get on to the queries related to the topic we are discussing right now. Any of your queries related to the other part, we can just park it later. Okay. Yeah, please come back to this point. Now, as around the substandard category, a general provision of 10% will be made. So herein, what's the provision? 10%. Now, on the standard part, a general provision of 0.4% is required to be made in case of NBFCs which are systemically important non-deposit taking and deposit taking. In case these are systemically important non-deposit taking or deposit taking, then the provision is 0.4%. Okay. However, if the NBFC is non-systemically important non-deposit taking, then the provision will be 0.25. Non-systemically important non-deposit taking, then the provision will be 0.25%. Okay. Clear on this? Yeah. Then there are certain criteria related to those assets which are in the nature of lease and hire purchase for creating a provision, for which once again we are given a table on page number 9.23. Yeah, all of you can please read this table. Okay, please remember to read this table. I am not getting into this table. See, I will tell you one thing, that in respect of all of these points, you will have to remember all of these points. So there is no real shortcut which I can give you to memorize all of these points. Though with practice you will be able to remember most of them, but definitely you will have to learn. Yeah. The only thing is that with the banks and with the NBFC there should not be any confusion. Means there should not be any mix-up. That in case of a bank, what's the percentage? In case of NBFC, what is the percentage? Because the classification is all same, but the basis of classification is different. Clear? Yeah. Now, we will move on to illustration number 3 to understand some of these points in more detail. So let's move on to illustration number 3 now. Quickly. In fact, before this illustration number 3, I would prefer to pick up illustration number 4. Yeah. So let's pick up illustration number 4 first of all, then we'll move on to illustration number 3. Okay. Yeah. So let's move on to illustration number 4 now. Page 9.26. Illustration 4. While closing its books of accounts on 31st March, NBFC has its advances classified as follows. Standard assets, substandard, secured portion of doubtful debts. It's the secured portion, unsecured portion, loss assets. You are required to calculate amount of provision which must be made against the advances as per NBFC non-systemically important non-deposit taking directions. Now, again, I received this query from KV Rama, wherein he asked me, sir, explain systemically important non-deposit taking company. Very simple explanation for this will be, that there is a regulation of RBI which prescribes certain criteria on certain NBFCs which fall into this category. Okay, and that criteria for the purpose of our discussion is about provisions, which we need to apply in this illustration number 4. Now, in the exam, you will have to remember what's the percentage for non-systemically important, what's the percentage for systemically important, and what's the percentage for deposit taking. Because question may not ask you about NBFCs in general. Question may be specific to the directions issued by the RBI, and therefore this aspect you'll have to remember. I'm not sure why you're not able to move you away from the meaning of this. Because there's no meaning. It's the direction. It's the name of the direction. It's like law. It's the regulation which has been issued by RBI. Okay. So now it's a very simple computation. The only thing is we need to remember the percentages. So first of all, we have standard assets. Then we have substandard. Then we have doubtful. On doubtful, we have secured and unsecured. So unsecured, then we have secured. On secured, we have 3 categories: up to 1 year, 1 to 3 years, more than 3 years. And then we have loss assets. Okay. And what's the amount? 16,800 over here. Then we have 1340. Then we have unsecured portion is 97. For the secured portion, we have 320, 90, 320, 90, 30, and 40. We need to put down the percentage now. Okay, so let's put the percentage. This is non-systemically important non-deposit taking. So that's why over here it is 0.25%. This will be 2, this will be 100, and this will vary on the basis of the age: 20, 30, 50, and 100. So we can compute the amount of provision. Simple. So amount of provision will be what? Can you all quickly compute and let me know one by one, please? 42, 134. This is 42 lakhs. This is 134 lakhs. This is 97 lakhs. 64 lakhs. 27 lakhs. This is 15 lakhs and this is 48 lakhs. So all in all, what's the amount of provision that we are required to create? What's the amount of provision that we are required to create? Tell me quickly. What's the amount of provision? Yes, quickly. All of you solve this. What's the amount of provision we are required to create here? We all solve this. Waiting for a response, huh? Okay, KV Rama, Sakshi, and Shaurya have solved this. They are saying it's 427 lakhs. Great. It's 427 lakhs. Easy and simple to compute. Yeah. See, the good thing about this question was that you were not required to categorize the assets into standard, substandard. You were only required to remember the percentages. And otherwise, it was a very, very simple thing. But there could be certain questions wherein out of the total advances, out of the total assets, its classification may have to be done by you. And let's move on to illustration number 3 to discuss the same point. Okay, so illustration number 3 now. This is page 9.25. Bright Finance Limited is NBFC. And it provides you with the following information regarding its outstanding amounts. 200 lakhs of which installments are overdue on account of 200 accounts for last 1 month. Amount overdue is 40 lakhs. So we'll say 200 lakhs of which installments are overdue on 200 accounts for last 1 month. Amount overdue is 40 lakhs. 40 lakhs, 200 accounts. And it's overdue for last 1 month. 1 month. On 24 accounts for 2 months, amount overdue is 24 lakhs. Then there is 24 lakhs. 2 months. How many accounts are there? 24 accounts. Then, on 10 accounts for more than 30 months, 10 accounts for more than 30 months, and the amount is 20 lakhs. 20 lakhs. And on 4 accounts for more than 2 years, amount overdue is 20 lakhs. 20 lakhs, 4 accounts. 20 lakhs, 4 accounts, which are for more than 2 years. Which are for more than 2 years. Okay. This 20 lakh has already been identified as substandard. So this has been classified as substandard. Yeah, you don't need to do this. This is already substandard. And one account of 10 lakhs which has been identified as non-recoverable. One account of 10 lakhs, non-recoverable means it's loss asset. Correct? If it's non-recoverable, it's loss asset. It's loss asset. Out of 10 accounts overdue for more than 30 months, this one. Out of 10 accounts overdue for more than 30 months, 6 accounts are already identified as substandard. That means within this, 6 accounts amounting to 6 lakhs. 6 accounts amounting to 6 lakhs are already identified as substandard for more than 12 months. So these are substandard for more than 12 months. And the others. What is other? So out of 20 lakhs, if this is 4 lakhs, so this will be 14 lakhs. This will be 14 lakhs, comprising of 4 accounts. Yeah, comprising of 4 accounts. 4. And the others are identified as substandard for a period of less than 12 months. So these are substandard for less than 12 months. Okay. Clear? Classify the assets of the company in line with NBFC systemically important non-deposit taking company directions and deposit taking company direction. Thank God, because the directions which are there for systemically important non-deposit taking and deposit taking are same when it comes to the categorization. So that means even if we are required to consider the directions for 2 types of NBFCs, both are same. So that means we can solve it in one way. Okay, clear? So now you can also check that out of this 200 lakhs, something would still be pending. Correct? Something would still be pending. Can you compute that and let me know? Let me also compute this. Let's see whether this 200 lakhs is covered in totality or something is pending. Let's just see. 200 less 40 less 24 less 20 less 20 less 10 lakhs. So 86 lakhs still remains. Out of 200 lakhs, 86 lakhs. This is what? Balancing figure. No information is available in the question about this 86 lakhs. Correct? The question is not giving you any information about this 86 lakhs. So where do you take this? Standard assets. You will have to take this to standard assets. Now, in a way, if I have to solve this problem, very easily I can solve this with the help of this flowchart also over here only. But in the exam, we will not be able to solve this in this manner. Correct? But still, for the purposes of our discussion, we'll do the classification over here only. And you can then present it the way it's given in the study material. So let's talk about this 86 lakhs. What is this? Standard. Let's talk about this 40 lakhs. This is overdue for 1 month only. So what would it become? Standard asset. This would be standard. These accounts overdue for only 2 months. This will also be standard. Okay, so what's the total of standard assets? 1, 2, 3. Let's check more. Now, 4 accounts. 4 accounts. Those have already been classified as substandard. So the question has given you this information. Question is saying this has to be substandard. So we are keeping it as substandard. Then, as around this loss asset is already specified by the question. So this is also done. This is also done. This is also done. This is also done. So now we are left with only 2. Now we are left with only 2. About these 2, we need to check whether they will remain substandard or they will go to doubtful. Because if an asset remains substandard after a particular time, it becomes doubtful. Okay. 6 accounts amounting to 6 lakhs remained substandard for a period more than 12 months. This is more than 12 months. Yeah. Now, because these remained doubtful for more than 12 months, so that's why what do we call them as doubtful? So these remain substandard for more than 12 months, so therefore they will become doubtful. So this will be doubtful category. This will be doubtful category. Yeah. Next, 14 lakhs. Yeah. 4 accounts which remain substandard for less than 12 months. What would they become? Substandard. So they will not become doubtful. They will become substandard. Now let's come back to this one. 4 accounts which remained substandard for more than 12 months. Sorry, if an account remains substandard for more than 12 months, what did we classify it as? Doubtful. So if an account remained substandard for more than 2 years, so even though the question is calling it as substandard, what do we need to call it as? Doubtful. So this will become doubtful. Okay, clear on this? You will have to do your classification on the basis of the directions. Just simply don't think that if something is specified in the question, you'll have to follow that exactly, because there could be mistakes which the question may want you to rectify. Mukmala is saying, sir, I am unable to understand the lakhs computation. See, I have not computed this. These are the informations which are available in the question. I've just put that down over here. Read the question and prepare this flowchart on your own. Shore is saying, so the 4 accounts of 20 lakhs which are outstanding or which have remained substandard. So it's not outstanding. These have remained substandard for more than 2 years. That's why they have become doubtful. Clear? Everyone clear on this? Any questions from your side? Please let me know. See, this question doesn't require you to create the provision. Now this can further be topped up. After the classification, you may also be required to compute the provision. Can that be done? Very easily. Because we know what's the percentage for all of these categories. Very easily it can be done. In fact, you can try that on your own. But for our purposes, what was the requirement? Requirement was to assess each and every category carefully, or to assess each and every account carefully, whether it will go to doubtful, substandard, standard, all of these. Okay. Any of your questions, any of your doubts, please let me know. Sakshi has understood. Very good. What about others? Any questions on this? Please let me know. Any questions, any doubts that you may have on this, please let me know. Sure, clear on this? Mukula, you can just revisit this entire part. Try to prepare this on your own. I've just tried to put this in the form of a diagram, because please understand the way it's solved in the study material is the final working. Before this, some rough working will have to be done by you. So you can say it's only the rough working which I have done. This makes it easier for us to check each and every item. Nothing is missed. In fact, this balancing figure I am able to make out. Total outstanding was what, 200 lakhs. Out of the total outstanding, I am just trying to compute the remaining part. Okay. any questions that you may have on this, please let me know quickly. Okay, Shorya is now clear on this. Great. So can I clear this part now? Yeah? Okay. So in the exam, if you want, you can also do this rough working. But this will not become your working note. This will be your rough working. And you must be knowing that there is a separate space that is available to you for all of these rough workings. They don't form part of your solution. You don't get marks, but at the same time, there is no deduction of the marks as against those rough workings. This makes it relatively easier. Now, if you read illustration number 5, that is very much similar to illustration number 4, which you should write for your homework. Illustration number 5. This is page number 9.27. Mukmala is asking, sir, how did we obtain 14 lakhs in substandard assets? That was the balancing figure. So if you look at the question, yeah, the last line of first para, it says, the last line of first para, out of 10 accounts which are overdue for more than 30 months. What's the total for this? 20 lakhs. 6 lakhs is outstanding for more than 12 months. So out of 20, if 6 lakhs is outstanding for more than 12 months, 14 lakhs is the balance. Then it says others. What is other? 14 lakhs. 14 lakhs is identified as substandard for a period less than 12 months. Clear on this, Kumbala? Yeah, clear on this? Okay, so now I will not move further on this. We are still left with some part of NBFCs, which we'll discuss in the next session. And of course, there's also a bit of one topic that is about liquidation, which again we'll cover in the next session. Okay, remember we discussed that liquidation will take towards the end. Yeah. So after this, we'll also pick up liquidation. Now, before I end this discussion, if you have any questions, queries, doubts, which I might have missed or anything which remains, you may let me know and we can have a discussion about that. But as around your queries, my request to all of you that please specify the query. Just go give me illustration number. That doesn't help me because I don't think we'll be able to solve full illustration. Okay, just give me a specific point or your specific query from the illustration or anything which you want to discuss with me specifically. Shubrat has solved this illustration number 5. Very good. And I would also suggest you should practice all the questions. You can also wait for that though. After we are done with this NBFC, that time also you can plan it. But even if you plan it now, I don't see that will become a big problem. There could be certain challenges which you can mark. And in the next session, anyways, we'll be having a discussion on that and we'll wrap it up. Okay, so any questions from your side, any doubts that you may have? Quickly, if you can go to your queries, please. Mukmala is saying, sir, I am unable to understand. Please explain on board and I'll note down. Sure. So now, if you go to last para, the last sentence of the first para, it says, out of 10 accounts which have been overdue for more than 30 months. Now, an amount for these 10 accounts which are overdue for more than 30 months is given in the middle of this para. That is 20 lakhs. So it says out of this 20 lakhs, 6 lakhs has been identified as substandard. 6 lakhs is substandard, and this has remained substandard for more than 12 months. Substandard for more than 12 months. Okay, this is substandard for more than 12 months. So now, out of 20 lakhs, if 6 lakhs is substandard, then the balance amount is what? 14 lakhs. Which the question is specified as others. Then it says others are identified as substandard for a period less than 12 months. So this is substandard for less than 12 months. Okay. Clear? Mukmal, I am hoping you are clear on this. Shubhat is saying, sir, I have already completed this illustration number 5 in table itself. Very good. Any more questions? Any more doubts that you may have? Quickly. Quickly now. Any more questions? Any more doubts? No? Alright, so with this, we can then end our discussion for today. And I would also suggest all of you that we are also approaching towards the end of our session now. And it's very, very important that you make sure that you're revising all of these concepts. And the revision is only possible when you practice questions. So this is not theory, which you can just read and keep reading. The practice will only lead to the revision. So practice is only possible when you get into the illustrations or the questions which are there in the study material. And the questions there are good enough for all of you. So you should practice all of them. Okay? Yeah? Clear? So thanks to all of you once again for your time and for your wonderful participation. In the next session, we will wrap up this NBFC part and we'll move on to the liquidation. Thanks to all of you. Thanks so much.